Income Tax Act 1961. Lesson 4. Agriculture income continued. Good morning, everybody. I am Mr. T.B.Agarwal speaking from Agarwal Income Tax Tuition Classes, Akola. In the previous video, that is lesson 3, we have discussed what is agriculture income. However, for better understanding about the agriculture income, we may say that agriculture income means any income, rent, revenue derived from land which is situated in India and is used for agricultural purposes by cultivator or receiver of rent in kind of the produce by processing on such land or by sale of product grown on such land by process of cultivation by cultivator or broadly says the farmer. Hence, to constitute agriculture, some basic operations are necessary, such as tilling of land, sowing the seeds, planting, similar kinds of operations on the land by human skill and labor. Further, any income derived from any house building owned by the cultivator and occupied by him or the receiver of the rent or revenue in kind which is appurtenant to the land and is in the immediate vicinity of the land and used for agricultural purposes, then income from such farming building will also be agricultural income under section 21AC and as such will be exempt under section 10(1) of the act. Now we will see what are the agricultural products from which agricultural income may be derived. Agricultural produce for sale by cultivator means wheat, rice, food grains, etc. It includes cereal, procurement or fruits, vegetables for consumption of human beings or articles of luxury such as betel leaves, coffee, tea, spices, tobacco, etc. It may also include commercial crops like cotton, jute, etc. All these are products raised from the land, and the term agriculture cannot merely be confined to production of food grains for human being, but must also be understood as comprising all the products of the land which can be used for consumption of human beings or growing of grass or pastures for consumption of beasts or animals or for trade, and will also include forest products such as timber, salt trees, tender leaves, etc. Profit on sale of standing crop or produce by cultivating by owner and income from growing flowers are also held as agricultural income. These incomes will be considered as agricultural income under section 21A and thus will be exempt from income tax under section 10(1) of the act. It may be clarified here that sugarcane is agricultural produce. But if the sugarcane is converted into good or jaggery, the income from such process would not be agricultural income. The profit or gain or income from sale of agricultural products is exempt in the hands of the cultivator or say the farmer at the basic stage only. If any trader purchases the product from farmer for resale and sells it in the market, the profit earned by the trader from such sale of the product will not be exempt but will be taxable in the hands of the trader because it will not be agricultural income for him as he is not a cultivator and it will be a commodity for sale for the trader. Thus, to constitute agricultural income, the conditions are 1. The land from which income is derived must be situated in India. If it is in foreign country, the income will not be exempt. 2. The land must be used for agricultural purposes. 3. It should be subject to land revenue or local tax rates. 4. Income should accrue by cultivation to the cultivator. 5. The house or building concerned should be or in the immediate vicinity of the land and it should have connection with agricultural produce. If the building is given on rent for residential purposes or any other purpose than agriculture, then the income will not be exempt from tax. Thus, we have studied the features of casual income and agricultural income in short, as discussed above, for immediate understanding of the students without going into much details. Since the Constitution gives exclusive power to make laws with respect to taxes on agricultural income to the state legislature. It is exempted from central taxation and hence it is not made taxable in the Income Tax Act 1961 under any of the heads of income. However, from the assessment year 1974-75, the agricultural income is schemed to be taken into consideration to determine tax on non-agricultural income in certain cases, that is for rate purposes. This will be discussed in later lectures or chapters which will gradually follow as to what is the scheme of partial integration of non-agricultural income with agricultural income with live illustrations on board. If you like this video, then please press the thumbs up icon and subscribe the channel and press the bell icon next to it for getting the notification of my next video. Thanks.